Imagine an ETF paying out jaw-dropping yields, triple digits on paper, too good to be true, or the opportunity of a lifetime. Today we're diving into MSTY, the YieldMax MicroStrategy Option Income Strategy ETF. It's one of the hottest, most controversial income ETFs on the market, with eye-popping yields and a strategy built around one of Bitcoin's most aggressive corporate holders, MicroStrategy. Before you think about buying it for those massive payouts, you need to understand exactly how it works, the risks involved, and why those distributions might not be what they seem. MSTY launched in February 2024 as part of YieldMax's family of single-stock option income ETFs. Instead of holding a basket of companies, MSTY is laser-focused on one stock, MicroStrategy, ticker symbol MSTR. Now, why MicroStrategy? Because it's heavily tied to Bitcoin. MicroStrategy owns over 200,000 Bitcoin, making it basically a leveraged bet on the crypto market wrapped in a corporate stock. That kind of volatility makes it perfect for option strategies. And MSTY isn't buying the stock directly. Instead, it uses a synthetic covered call strategy. In simple terms, it recreates exposure to MSTR using options contracts, then sells call options on top of that position to generate income. The result? Investors get exposure to MSTR's wild ride, plus monthly distributions funded by the premiums collected from those call options. Let's break this down. MSTY sets up what's called a synthetic long position. Instead of buying the stock outright, it uses a combination of derivatives, typically a long call and a short put, to mimic the returns of MicroStrategy. Once that exposure is in place, the fund sells one-month call options that are usually just out of the money. Every time MicroStrategy's volatility spikes, which happens a lot thanks to Bitcoin swings, those option premiums get juicier. That's where the income comes from. So, if MSTR stays flat or moves a little higher, MSTY pockets the premium and passes a big chunk of it to shareholders. But if MSTR skyrockets, investors don't capture all that upside because gains are capped once the stock price blows past the option strike. On the flip side, if MSTR falls hard, there's no protection. The downside risk flows straight through to MSTY holders. Here's what grabs headlines. The yields. Since launch, MSTY has boasted annualized distribution rates in the triple digits. I've seen figures ranging from 160% to over 300% annualized yield, depending on which month you look at. For example, in August 2025, MSTY paid out $1.08 per share in just 1 month. At a share price around $15, that's an insane payout rate. But before you get dollar signs in your eyes, there are a few caveats. First, those headline yields are annualized, meaning they multiply 1 month's payout by 12. That's not the same as a guaranteed forward yield. Second, a large portion of these distributions aren't traditional dividends or interest. Instead, they may be classified as return of capital. That means you're essentially getting some of your own money back, which can slowly erode the fund's net asset value over time. So, while the payouts look massive, they may not be fully sustainable in the long run. All right, let's run through some quick stats. The expense ratio comes in at about 0.99%, a little steep compared to index funds, but pretty standard for actively managed option strategies. The fund has grown to around $4.6 billion in assets here in the US, showing just how popular it's become. Performance has been eye-popping too. Over 250% total return in the first year and a half, fueled by both MicroStrategy's price swings and those hefty payouts. And speaking of payouts, distributions land monthly, usually at the end of each month. This is the part where you really need to pay close attention. Risk number 1, full downside exposure. If MicroStrategy crashes, MSTY goes down right alongside it. There are no protective puts here, no safety net. Risk number 2, capped upside. If Bitcoin takes off and MicroStrategy doubles, you don't get the full ride. Your gains stop where the fund sold those calls. Risk number 3, return of capital. Some of those big payouts may just be your own money coming back to you, which slowly chips away at the fund's value and its ability to keep paying in the future. And risk number 4, volatility whiplash. MicroStrategy is one of the most volatile large cap stocks out there, basically a proxy for Bitcoin. That makes the income attractive when premiums are high, but it also means gut-wrenching price swings. So, don't let those triple-digit yields fool you. MSTY isn't a safe, steady income play like bonds or dividend aristocrats. It's a high-risk, high-reward bet tied directly to Bitcoin's roller coaster. So, is MSTY a hidden gem or a ticking time bomb? On one hand, the distributions are unlike anything you'll find in traditional income ETFs. If you're comfortable with the risk, MSTY could be used as a speculative income play, a way to harness Bitcoin volatility without buying Bitcoin directly. On the other hand, you need to go in with eyes wide open. The yields aren't free money. They come with capped upside, full downside risk, and possible erosion of value over time. As always, do your own research and make sure any investment fits your goals and risk tolerance.